In business news, inflation continues to rise in this country, and that could complicate a Bank of Canada announcement next week. With more on this, we're joined by CityNews business editor Kris McCusker. Kris, what can you tell us?
Well, the latest inflation reading, FISA, coming in at 3.4% in December. That was up from 3.1% in November. So not exactly what everyone was hoping for. On a monthly basis, though, the index fell by 0.3%, and that was the biggest drop since December of 2022. Grocery prices up by 4.7% in December compared to a year ago. Absolutely no change from November here. So that contributed to an uptick in the overall inflation reading. It's also worth mentioning that it's not really an apples to apples comparison year over year. And then for further context, we also saw an uptick in U.S. inflation last month as well. Now, what is interesting here, most economic data does show evidence of that aggressive interest rate hiking cycle, but inflation is still not back to that 2% target. Although the Bank of Canada governor did warn in December that there will be a few bumps to get back there.
Okay, so how could these inflation numbers impact that interest rate announcement next week?
Well, I can tell you for sure we're not going to see any change next week. There has been some talk, perhaps, that we could see an interest rate cut as soon as April, some thinking that it could come in June. But this sets a very interesting backdrop for the Bank of Canada because we are seeing this slowing in the economy, but not enough slowing in inflation. As mentioned, April is a possibility for a cut. The U.S. Central Bank could also be a factor here. If the Fed cuts in March, that all but solidifies a cut on this side of the border because of what the U.S. move could do to our loonie.
Okay, so meanwhile, the parent company of Tim Hortons has just made a massive purchase south of the border.
Yes, so we're talking about Restaurant Brands International, and basically the company is sort of expanding its reach in the U.S. and it's looking to accelerate an overhaul of the company. Restaurant Brands International says it signed a deal to buy Carrols Restaurant Group. This is the largest Burger King franchisee in the U.S. This deal worth $1 billion U.S. Now, Restaurant Brands International already owns Burger King, along with Tim Hortons, Popeyes, and Firehouse Subs. Carrols has over 1,000 Burger King restaurants in the U.S., along with 60 Popeyes restaurants. This deal still needs shareholder approval, but it is expected to close in the second quarter of this year.
Okay, a massive deal right there. Kris McCusker, thank you so much for joining us.
Okay.